People have been asking me for a really long time to host a finance leader. The challenge with doing this is that it becomes a fiduciary responsibility to host someone who is genuine, has amazing insights, and can explain technical aspects without using jargon like I just did. So it took me just 18 seasons to host the perfect person. He's Iftikhar Shaikh, who has 22 years of finance experience across behemoths like MetLife, ICICI Pru, HDFC, Reliance Mutual Fund, and Max New York Life. To top it, he spent more than half of his working life in the UAE. A very warm welcome to the show, Iftikar.
Thank you very much, Kaushik, for having me on your show. It's an honor for me to be on this podcast and share some of my views and simplify the world of finance for your audience.
Thanks so much. So, on that note, quite a few commonalities that we've had. I did my summer internship from Max New York Life in 2004, and you were an associate partner with them also at the same time. So, let's start right from there. One of the first few things I was told during my induction was that selling life insurance is one of the toughest jobs, primarily because you need your client to imagine themselves dead. What's your take on whether this should be a topic talked about more often?
Well, on the lighter side, I think you should ask this question to the people who are not talking about it. Yeah? Because people like me, more than often, you will find me talking about insurance and the power of life insurance. Keeping that humor aside, I think it's very important for us to recognize that life insurance has never been a topic of social discussion anywhere. It was not there in the past, and it is not there today as well. So one thing what have not changed in my observation throughout almost 30 years in the business, that people really do not want to talk about life insurance. And the reason is very simple. Yeah. Most of us fail to see that far down the line. We all have our own beliefs, and one of the belief system echoes this point within ourselves that anything and everything can go wrong in the world besides us. So this is one of the reasons why people don't talk about life insurance, or they don't prefer to talk about life insurance. But I would take this opportunity to pass on the message, which I keep reminding to myself, to all your listeners, specifically from the people within the industry, my colleagues, irrespective of where they're listening to me, is let's take this as our social and moral responsibility. Spread awareness, educate, and talk about this important topic of life insurance.
What's your take on the ULIP kind of plans? Do you suggest someone should take a pure life insurance, or do you feel that they should actually take something which also has a return aspect to it?
Well, you're opening up a very interesting discussion by asking this question. I would simply put this on the table. Let's have our expectations set for the purpose and the reasons why you are getting into buying insurance. This brings us to the important topic that the salespeople, whether you are an insurance agent or you are a RM representing any other financial institution, is to focus on the basics of the sales process, which is understanding and uncovering the client's needs. Because until you are able to discuss and find out the purpose of what, why, how much, and for how long your client requires a particular kind of a solution, any discussions on the product straight away, diving whether the client needs a pure protection product or the client needs a pure investment ULIP kind of a product, is meaningless. The answer to the question could only be found when we get into uncovering the needs of the client and having those discussions with the client.
Let's move into the asset allocation next. Mutual funds are something that's quite significant. And we see so many of the mutual fund houses trying to convince people to buy this year based on the results that they've had in the past few years. Is the past a reliable enough indicator of future success?
In fact, the same fund houses, if you get into the details of the memorandums and the TNCs, it has an important disclaimer which says that past performance is not the guarantee of the future results. Most of us and the retail and common investors miss out on reading and understanding the importance of that. But I would definitely say it's an important indicator to look at while you're making your investment decision in selecting the scheme or the fund house or the fund manager one has to look at before making any decision. But plainly, do not consider past performance as the only indicator to make a decision on your investment.
Makes sense. Now I'll move into something which is very close to many people, but I've had a terrible run. That's with stocks. Whereas I've hit gold per se, or Bitcoin, shall I call it, right from when I started trading in cryptos from 2012. Interestingly, 75 to 80% of retail investors also don't make money in the stock markets. So it was nice to see that I'm not alone. But what are the key points that you feel are critical for being successful, especially when it comes to the stock market trading?
Just a caveat, I'm not an investment advisor and I'm not an expert investor myself, but I'm just sharing my experience over here.
Mhm.
I had learned this simple, basic investment rule pretty early in life from a retail investment perspective. For anybody who wants to invest into the equity markets, is to follow the rule of 100. It simply says that deduct your current age from 100, and then whatever is your answer, you should take an exposure into the equity markets according to that way. Let me give you an example. Your current age is 35, so you just minus 35 out of the total value of 100. So you start and invest up to 65% of your investable corpus into equities, and then spread the balance into other asset classes to build your portfolio to reach these diversification levels over a period of time. And let me also take this opportunity to share a couple more insights for the retail investors to be aware and make informed decisions. Most of the things go south because of mismatch of expectations, whether it's insurance, investments, relationships, outcomes, businesses, projects. Everything starts from understanding those avenues, what you're getting into, and having the right set of expectations. Generally, I've found people to have unrealistic expectations when they get into investments, whether it's equities or any other asset class. So, the rule from an equity investment perspective is the rule of 10, 5, and 3. Now, what does this mean? Any equity investment, what you're making, it's fair to have an expected potential rate of return to be around 10%. Any investments you're having in debt markets or bond related instruments, a fair expected return is 5%. And anything where you're investing which is liquid, money market or equivalent to cash, I would say the expected rate of return potentially is around 3%. So you should remember this while you enter into any kind of decision making for investments. Have realistic expectations, stick to the rules which are the proven rules over the years, and you will never get disappointed. Another thing probably I just want to share, which specifically people from younger generation miss out, the power of saving money regularly for a fixed term over a period for a defined contribution in your investment strategies. Let me give you some small example for people to understand the power of SIPs is the rule of 843. Again, I'm not bogging you down by giving rules, but it's for you to remember it easily. It says that you start with an SIP contributing, example, 30,000 a month, and the expected rate of return slightly better than the benchmark of 10% is say 12%. So by contributing 30,000 a month at the rate of 12%, it would take 8 years for your investment value to grow and become 50 lakhs. But the next 50 lakhs would just take 4 years for that value to get accumulated. So the next 50 lakhs would be created in just 3 years. And if you keep going on, this period will keep reducing. So the message to the retail investors is do your asset allocation properly, apply the rule of 100, have realistic expectations of 10, 5, and 3, and remember the rule of 843. This reflects power of compound. The real money what an investor makes is not by trading in and trading out. It's by staying invested and enjoy the power of compounding of your wealth. One of the quotes by Albert Einstein goes saying that the compound interest is the eighth wonder of the world.
Very interesting insights. The other class where people have put a lot of money, this includes obviously Dubai as well as India. Where do you feel that real estate as an asset allocation should figure? And is it something that's wise at this current juncture?
I come across very often in social interactions with the community. I think real estate is becoming more fancier with the passing time and passing days, where people get attracted with the returns it has given in the last few periods. My advice to everybody on the retail real estate investing is measure the price to rent ratio It's very simple. Take an average or the median price of the real estate property, whether commercial or residential, and divide it by the median rentable value for the year. And if your resultant answer is 15 or under, I think that makes a wise investment decision into that asset of real estate. And in case this answer is 20 and above, then it doesn't make sense for you to park your money and take exposure into real estate. An example, any property which is worth 1.5 million and the rental value for the year is 100,000. So you divide 1.5 million by 100,000. So your resultant answer is 15. So this will make a good investment decision.
I really wish I knew this. I invested in Dubai, and as you were mentioning the figures, I just noted that yes, it was below 15. So that's a, but I
So
really
you
wish.
made money then.
Unfortunately, so that's where actually the catch comes in, right? So real estate is very illiquid kind of an asset, and this unfortunately happened just before COVID. So I got stuck with the property during the COVID times. Still managed to get out of it decently well, but the upside wasn't as high as it should have been, and that's primarily where the illiquid piece of it comes into place. So is this something where people used to prefer commercial, but I think the commercial also has completely turned around after the COVID scenario, right?
Well, again, Kaushik, as we all know, and I would reiterate that any investment decisions has lot many elements to look at and consider before making a decision. The underlying rules or the formulas, what I'm trying to share and simplify, is for the people to measure situations, whether it is in terms of the return or in terms of the expectation, before making a buying decision. It doesn't mean that all the other factors would not be important or it should not be considered.
True.
Uh, Real estate is known to be an illiquid asset. It's very easy when you go out in the market to buy, but at the same time, it becomes very difficult when you want to sell. The prices varies, the expectation varies, the situations varies people to people, and that makes it even more difficult. The ticket sizes are really high, so the market gets narrowed down to find an ideal buyer at an opportune time. So nobody predicted COVID would come, and nobody predicted the way the market would rebound after COVID, whether it's real estate or any other market, what we are trying to talk about.
EI by itself has, of course, existed for many years. But recently, we have been seeing that AI has displaced close to 300,000 jobs in the past 15 months alone. Do you see this lean time continuing of the, let's say, the funding winter, people actually struggling with their jobs? That's part A. And the second part would be, how do you recommend that people should be allocating their funds during these diverse economic environments?
This is another technical question, Kaushik, you're asking. Let me explain what the funding winter means to the larger audience for them to relate to what we'll discuss.
Mhm.
Funding winter is a term used basically to describe the periods where the capital inflows are reduced in the businesses or the startups. So it's shrinkage of the availability of new capital being pumped. Why are we witnessing this? Because all our answers probably would come into light once we understand the reasons behind this. Let's take COVID as a period where we are trying to put that as a milestone and compare. Post COVID, the cost of capital have increased globally. The money at the rate which was available for borrowing has gone up. We all know how the interest rates have behaved after the COVID. Inflation. So most of the economies across the globe have witnessed very high levels of inflation. The consumptions have gone down at a holistic level, global consumptions. All the data shows that it has softened over a period of time. Geopolitical situations. Probably we've never seen so many wars running parallelly across the globe in various regions. Expectations, again, I boil down to expectations, what the investors have on the money, what they pump into the businesses. So, in a nutshell, the money is there. The money has not gone anywhere, but it's not seeing or channelizing into businesses because of various reasons, expectations, cost of capital, inflations, geopolitical situations, so on and so forth. So, this is why we are witnessing this situation of funding winter, which is momentary.
Mhm.
We're already seeing signs where the Fed is working to see how the interest rates could start reducing. And once that cycle kicks in, then you'll see another phase, all the associated macroeconomic indicators turning amber towards green, sentiments start becoming positive, and you will see a lot of money getting poured into business with good growth prospects and potential.
Makes sense. We have a lot of similarities. The other similarity is that we both moved to Dubai in 2008. I had done my schooling from there as well. So I went basically for the tax-free money. Was tax-free then. My wife was more interested in the aspect of global exposure. So what prompted you to move there? How has that experience been and how different is it from how things are in India?
All right. Let me be really honest over here, Kaushik. At times, we take informed and planned decisions in our careers, and at times, there are some decisions which happen, and then you plan
True.
to make those decisions successful. So, if I were to give you my situation and my story, I was well settled in India, working with some big corporate houses based in the financial capital of the country, having decent exposure, position, visibility, and growing in management cadre. So, I was doing pretty well. And then one of my ex mentors, or I would say managers whom I worked with, I had very high value for him. He moved to Dubai, and then he was setting up a new business vertical, and he wanted like-minded people whom he has worked in the past to come and help him and support him to build this business. And this is where I think first thought of moving and taking an exposure outside India kicked in. And that's where I started doing my research, analyzing various situations and seeing the opportunity. It had its own associated risk along with it, for sure. But then I took that opportunity on my side, and I'm very happy today. I'm here because of that.
In India, generally people tend to have nowhere close to a 9 to 5. It's more like a 5 to 9. Whereas I think it's much different in the Middle East. Is that also something that you experienced, or is it only primarily the IT sector?
See, I would say, irrespective of the country where you are, maintaining a healthy work life balance is very, very important. And it comes from the company where you are working for and the culture of the company, the value system of the company, and the teams and the individuals' values over there.
Hmm.
So, people generally try to work really hard, but they don't work smart. And then they end up having the situations of having imbalance in their personal lives.
True.
I would attribute people to have much more disciplined approach, have a strong time management abilities and skills to fulfill and complete your projects on time,
Mhm.
and work with organizations which really value their employees and create those well-being systems of maintaining and offering a healthy work-life balance ratios.
I picked up one word in there, objectives. And I know that you are also very passionate about objectives and key results, OKRs. You were mentioning that you should know where exactly you want to go. And therefore, you're able to track it. In startups that I have been in, we have tried implementing it in a couple of places, but it's very rare to actually be able to execute it. So I would love to know what is your take on OKRs and how do you really pull it off with, let's say, large corporates?
All right. I think OKR is very close to my heart. OKR is nothing but objective and key results, which is one of the methodologies of having a powerful goal setting done. What does OKR do? Basically, OKR helps us drive alignments, manage performance, and get the desired result in growing and high performing company. At a basic level, OKR is just a tool to engage everybody across the organization, come on common grounds, have simplified and measurable goals, and track your performance at every regular interval. Measure yourself where you want to go and where you are today, and what further needs to be done in terms of identifying initiatives beyond the key results, what you said. Whether it's a large organization or a small organization, OKRs will create focus. It will help in creating accountability across the board, will help engagement of all your team members, various functions and departments. It will build ownership mindset. It will build transparency because it get published and every single person in the organization has visibility too. I would also want to mention that with little experience of OKR and my exposure close to a year, I have started using OKR methodology for my own personal goal setting. If I may just give you my example, I always believe in having the larger goal, larger perspective in my mind. If you may recall the famous book of Stephen Covey, The Seven Habits of Successful People, the seventh habit, what he mentioned was always begin with end in mind. So that's what I apply. I visualize the goal, what I want to achieve, which is always going to be a long term goal, which I don't compromise on. And then I will break it down into smaller milestones and then further smaller milestones, and then work on the actions and the initiatives, what needs to be taken, and focus at one milestone at a time.
Fantastic. And if you've got to choose just one trait of a leader that he should have, what would that be?
Well, I'm still trying to find an answer myself. It's very difficult to have one trait because I don't think a single trait can make a leader, because it's an amalgamation of various qualities, whether it is about integrity, having a clear vision, good communication skills, the leader himself to be adaptable with the changing environment and situation, having empathy, should be resilient, dedication, always on the look for knowledge, continuous learning. So I would say it's a full package. No one single trait can make a leader. What I understand of leadership is if your actions inspire others to dream more, learn more, do more, and become better versions of themselves, you are a leader.
Golden words. So, in your view, are leaders born or made?
Well, I'm sure you would have guessed my answer by now. They are definitely made, because nobody is a born leader, as for I feel, because it's just like anything else. You have to work hard, work hard, work hard, and work regularly to become a leader and be a better version of yourself. So, if I may just give you a good power quote of our ex president of India, Mr. APJ Abdul Kalam: if you want to shine like a sun, first burn like a sun.
The last question to wrap it up, what is the one takeaway that you'd like to share with all the future leaders who are listening to the show?
Well, I would just say the future depends on what we do in the present. So, irrespective whether you are a leader or you are in different positions or capacities in your work, professional or personal life, do right things in your life today and every day to reach your goal of where and what you want to become.
Thank you so much, Iftikar. It was a great note to end on, and it was an absolute pleasure hosting you on the show and wishing you a lot of continued success.
Thank you, Kaushik, for having me. Indeed, it was a pleasure interacting with you. And I hope all the listeners and all the followers of yours find value. And if they could pick up even one thing out of what we discussed, it would be a great, satisfying moment for me.
I'm sure that will happen, and there'll be many, many of them who are going to come back with a lot of appreciation for this show that was well awaited. So, thanks once again.
Thank you. All the best.